Well, I think inevitably in a lot of Western nations, you're going to have three stimulus packages. The first stimulus package introduced by governments is going to be a stabilisation package. It deals with what has been an enormous shock of putting economies into hibernation. The second stimulus package will be about trying to get consumers to come back out. The US, Australia, and most developing world economies rely on household consumption for economic growth. So the second package will be focused on that. And then the third package, which inevitably governments will have to deliver, will be focused on sustainable long-term growth, and that would probably be looking at infrastructure initiatives right around the world.
So, Mr. Hoggie, how does this change the outlook for Australia? You've just heard that S&P is obviously quite concerned about the situation moving forward. What does it mean for Australia's long-run growth rate, and is a recession ultimately inevitable now?
Well, I'd never say something is inevitable because during the GFC, Australia continued to have a strong economy. I remember during the Asian financial crisis, when 7 out of Australia's top 10 trading partners were in recession or depression, Australia had the fastest growing economy in the world. It's a very malleable economy, the Australian economy. It has a very strong export market with China. In fact, China is by far our biggest trading partner. But it's also got enormous investment from the United States. It'd be very hard not to dip into recession, but I think having wage subsidies is a really good initiative. And the initiatives so far out of Australia are, I think, well targeted. And it's also reflected in the fact that Australia has, thank goodness, a very low per capita mortality rate associated with the coronavirus. That may change as winter approaches, but it is a low number because they've managed to close their borders.
Mr. Hawkey, this is Martin. Let me quickly jump in with a question, and let me ask you to connect what you're seeing in the U.S., in D.C. now. A lot of 401ks, retirement funds are under pressure. Obviously, there's been a huge value destruction. Australia, of course, the parallel there is superannuation. You'll appreciate this as a former treasurer of Australia. At some stage, governments and societies are going to have this conversation. That is, look, right now, even the most fiscally conservative people are going to have to come around to the thinking that, look, we need to spend now and worry about debt and worry about the consequences later. But at some stage, you're going to have to figure, that taxes are going to have to go up, that people are going to have to literally work longer, that retirement ages may have to be pushed up. If only because retirement funds have been absolutely decimated, no?
Well, I'm not so much concerned about rising taxes because if you increase taxes, you crush economic growth. So there is a natural speed limiter in governments just increasing taxes. I am much more concerned about economic nationalism that is coming at a rapid rate down the road. Where governments start to look at nationalising the supply lines and the risk for integrated supply lines around the world, the risk to the total volume of global trade. That is a much bigger threat to the sustainability of growth coming out of this period than higher taxes by any countries. Because what it does, it'll increase prices. I mean, if you nationalise your supply lines, you naturally increase the cost of the inputs to your economy. That will lead to inflation, and that will have that's at the end of the day, inflation is going to be the only way many governments are going to be able to pay off their debt. They just won't be able to do it by trying to keep low inflation and increasing taxes because you're never going to get the growth story going.
So, Mr. Hawkey, let me ask you, this is not a cheeky question. I think it's legitimate. For a lot of countries in Asia, they look at Australia. It is their, literally, frankly, breadbasket, if not farm, where a lot of produce and meat and everything comes from. What is the situation in Australia now with regards to this whole risk of nationalization that you talk about? Obviously, Australia needs to feed its own people first, no?
Well, Australia produces 4 times what it consumes, and it is also one of the world's biggest exporters of energy, looking at natural gas, looking at coal, uranium, and so on. So Australia has that part of its export program in place, and there will still be demand for that. The question will be, how do you get household consumption to come back? Property prices are holding up and obviously fall less than the equities markets. I think equities markets around the world are irrational at the moment. I mean, completely irrational. I don't know how you can effectively hibernate economies and the equity markets continue to increase from some of their lows. It just doesn't make any sense at all. And what I think you're seeing is an increasing move for countries to start to look at domestic production, which might be a short-term sugar hit to their economies, but over the medium term is going to cause a lot of problems. And whenever you have economic nationalism, political nationalism, there's some pretty ugly and very unappealing outcomes from that. So I think, the great challenge moving forward is world leaders are going to have to keep talking. They're going to have to make unpopular decisions about keeping global trade on track. I don't think they're going to do that, and I think it's going to be a very different world coming out of the coronavirus era. No doubt about that.